Hey, good morning. Let's go over today's trade plan. So on Friday we saw a upside breakout, and in the overnight session the market has been balancing within a range. Heading into the open, we have support at 2001 to 2003, and holding above that area would tell us that the breakout from Friday is still intact, and from there we can go up and tag the previous close and the initial resistance zone at 10.5 to 12.5. In the event of a break below 01 to 03, we have the bull bear zone at 94 quarter to 96 quarter. So that's an important inflection point in the market, and responsive buyers can be active and defend that zone on first test. And as long as that zone is holding, the buy side can still technically maintain control. On the other hand, if you fail at 94 quarter or 96 quarter, at that point the market structure would start to change, and it would tell us that the breakout from Friday is now completely failing, and that could result in some continued selling pressure. So it's important at this point for the buyers to hold ES above 94 quarter, 96 quarter, but ideally we actually see it holding above 01 to 03 and then tagging the 10.5 to 12.5 and possibly extending the range to the upside. Now that's something we are going to have to see off the open to make sure that there is sustained broad market strength and momentum in this market, which would support upside continuation. So, anytime you're breaking out and opening near the highs, you have to look for those underlying signs in real time to support continued movement in direction of the trend, which right now is still pointing to the upside. So we are going to focus more on the buy side here. Responsive sellers can be active if the market gets exhausted into resistance. So in the event that we got a straight line move into one of the resistance zones above on the smaller time frames, that can result in exhaustion and the market can get overbought, and from there we can balance out a bit. But as long as ES is holding 01 to 03, 94 quarter, 96 quarter, the buy side can maintain control. And then if we fail at 94 quarter, 96 quarter, then perhaps we can head down, test 88 to 90, and the next really major support below 94 quarter is at the 78 to 80 zone. And that's a larger time frame area of support, and the expectation is for buyers to be active there, and from there the market can continue to balance. The other thing to keep in mind is that in order for the market to break below the bull bear zone, the 94 quarter, 96 quarter, we are going to have to see broad market weakness and sustained downside momentum. So in the event that the market heads down and tests that zone, but we're not really seeing a whole lot of downside momentum, and let's say the other markets aren't really selling off, and the AD is not really at an extreme, if it's only around minus 1,000 or so, then that would be a signal that the market can just continue balancing, and the bull bear zone can hold, and from there we can balance in a range. So that's really how the market context is set up at this point heading into the open. Let's keep an eye on the 01 to 03 support, the previous VPOC at 07, and see if the buy side can continue to maintain this control. And if we're getting any signs that are pointing to the contrary, if we're getting sustained downside momentum, then we just have to be more careful and wait for better trade location. And on the upside, at the very minimum, we can tag the 10.5 to 12.5, but ideally you want to see the market extend the range to the upside, perhaps test 16 quarter to 17.75 and 21 to 23.5, at which point we could start to see the sell side become more active in the market again. So those are our main thoughts. Let's see if the buy side can maintain control here, and we'll take it from there.